Hello everybody, a very good morning to you and welcome back to another live stream here at Taurex and a brand new week in the markets, which means more opportunities that we can look to try and get involved in these moving markets at the moment. We're going to break down the top events and opportunities of the week. This is an exercise that I always do, no matter what, as a trader, whether it's on a Sunday afternoon for some people or on a Monday morning like myself. I've always been doing this stream for years now. Monday morning, let's plan the best trades, the best opportunities, where we're going to see the most volatility, and that's exactly what we're going to do today. So hope everyone enjoyed their weekends and is ready for a new week of trading. If you are around and have any questions that you'd like to for me to have a look at, then feel free to do so. You can put that in the Discord channel like Curtin just has. Hello to you, Curtin. Good to see you. Or you can put it in the on the actual YouTube chat as well. I don't mind anything you want me to cover, then I'll be more than happy to do that. Good morning to you, Dibble. Hope you're doing well. I did have a good weekend and looking forward to your stream. Thank you very much, and I hope you're doing well. So we do have an update actually on a trade, which I have no hesitation with holding trades over the weekend because I trade on a slightly higher time frame anyway. So I will be giving you an update on that live trade. It is on dollar yen, so I do apologise. I've been very one-dimensional in February so far. I've only traded dollar yen for some straight. There's no reason why. It just seems to be it's just a coincidence really. It's been the market which has yielded the opportunities for me. So yeah, no idea why. So maybe we'll do that first. We'll have a breakdown of that dollar yen trade first. See how we're getting on. And then I'll update the trading journal as well, which I always do in every single trade that I place. So, right, let's head over to the charts and let's just head over to our dollar yen trade, which we placed on Friday. And as you can see, it's running really well. So I've had a bit of a battle with dollar yen. So I've placed 3 trades this month. Before this one, 3 trades this month. All of them are on dollar yen. I went long twice and lost 4%, and I went short once and gained 1%. Now we're short again, and it seems to be that dollar yen shorts have been the profitable play for me, because here was my entry up here. For those of you who trade the this particular strategy that I use, which is called the Trend Rider, which is where we have an EMA 12 and an EMA 36. Really simple strategies, nothing too complicated about it. I do try to sprinkle in my own sort of fundamental views as well. Yeah, really nice trade. 0 drawdown so far. Entered it here, 152.936. So I like the fact that we had some whole number support, resistance, around that 153 level. Whole numbers are always a good area of support or resistance, and you can see that we had that coming in at 153. We actually went pretty much up to it, look, to the pip. 153.006 is what we tested. We then reacted lower, and it was a good Friday afternoon. In trading, you need a little bit of luck, right? And I did get a little bit of luck here when we had the retail sales come out on Friday, and they're a bit softer. It happens, yeah. Get a little bit of luck. Sometimes it doesn't go with you. Sometimes it does, and it's about being involved to try and get involved with that luck sort of thing. So pretty much had that. Look how this EMA 12. This is why I love this strategy. Look how well it's been respected. This downside bearish trend. It's been respected really nicely. So we're currently trading 2.5 to 1. Now this was a 1-hour trade, which means I placed 1% risk. So when I got to 1 to 1, which was here, I closed half of the position off, as I always do. If you watch my streams, you know that's what I always do. 1 to 1, close half the position off, so I closed 0.5% profit, and the rest is running. So what I'll do is I'll head over to the trading journal, and I'll just quickly start to fill this in. So when the time's right. So we actually entered that on the, it was on Valentine's Day, to 14, 20, 25. So the 14th of Feb. It was short. Dollar yen, no surprise. Pretty much 153, but we'll call it 152.936. No exit. We haven't got a closed P&L yet. It was a H1 TR. I have to say, in terms of my confidence in this trade, it was a 5. The reason was because not just necessarily because it was a a good entry on the trend rider, I actually really like the fundamental story as well. The fact that we're seeing all that stronger data from the US, yet the dollar wasn't really performing that well. And then we knew that the Bank of Japan were looking to increase interest rates a bit more than what people had thought originally, and they've come from a really ultra accommodative policy up towards hiking rates, which is strong for the currency. And we've got all of this stuff going on with tariffs and the uncertainty around the war in Russia and Ukraine about the peace deal and Trump leaving out Europe and all uncertainty. Japanese yen's a great safe haven currency for that, and that's why I really liked it as well. So fundamentally bearish. I know I did change my mind there because I said I was fundamentally bullish before, but I was wrong, and I admitted I was wrong, and we explained and went through that last week why I was wrong. So that's just an added comment on there as well. So yeah, good start to the trade, and in terms of any more upside or downside that I think could be coming in this, well, if you look at the 4 hour time frame, I think it's pretty obvious that we're looking at this. We're looking at this low. If where this liquidity line is, or this market structure low, should we say, if this now breaks, we're actually shaping up. Look at I'm on the 4 hour time frame. We're actually shaping up for a 4 hour short as well. So that's the beauty of sometimes we're trading the 1 hour before the 4 hour, because the trend happens on the 1 hour first, then moves up, right? So we've got a good entry on the 1 hour. If this breaks, if 151 breaks and this low breaks, look for that. And that's something that we'll look for in the next coming weeks or so in this market. Okay. Right. Just checking there wasn't any requests. Okay, good. There was no requests, guys. No, you're happy to meet with me to carry on. That's fine. Okay, so that's current trade that I'm live on at the moment. So it probably means that I won't be necessarily looking for any more dollar opportunities, which is actually not a bad thing, because if you look at the data that's coming out this week, it's not a great deal of actual dollar data coming out. We've got the FOMC meeting minutes, I think, on Wednesday. We'll go through the calendar. But it's actually a good thing. It means I can maybe go into a market which isn't dollar related or US related. I know often it is dominated by what happens in the US, but this week's a week that maybe we can trade some of those minor currencies. Australian dollar, New Zealand dollar. Why? Well, we've got their interest rate decisions coming out this week. For those of you who know me by now, I always bang on about how interest rates are the driving force of what happens in markets, interest rate expectations, interest rate differentials, all that sort of stuff. And this week should be no different. So actually one of the best pairs for me to trade, J&D, hello to you, good to see you. Thank you very much for the message. Hope you're doing well. And thank you very much for tuning in. Interest rate, anytime we get an interest rate decision, we should always be driven towards that pair if you're trading Forex, for example. So this week, we're on Monday at the moment, nothing. Tuesday? I'm sorry, no, let me just refresh this, because it's the time I'm still getting used to the time difference here. So I think this is actually out 3:30 a.m. No, it's Tuesday. Yeah, Tuesday. Sorry. Tuesday, 3:30 a.m. in the morning for me, and we've got the RBA interest rate decision. Previously at 4.35%, the forecast is for a cut down to 4.1%. Thank you very much. No, I appreciate you joining. Yeah, I've been live every day still, so we're building up the community here at Taurex. Are you in our Discord channel? It's in the link to it's in the description if you want to join. I put all my trades in there at the moment. I'm just documenting all the trades that I place on there. Oh, you are? I thought you was in it. Right, so typically, central bank, what we're expecting or what we're looking for is either hawkish language or dovish language. Hawkish is interest rates remaining where they are or hiking rates. Dovish is interest rates being cut, right? And the language that follows around that as well. Oh, good stuff. Thank you very much. So I want to do a bit of cross analysis here. compare that to the RBNZ, because the main idea of the stream today is I wanted to really dive into the Australian dollar versus the New Zealand dollar, because we've got the central bank decision from the RBA and from the Reserve Bank of New Zealand, the RBNZ as well. So they're the two currencies that we're looking at. When we head into, I believe it's Wednesday, that the following day is when we've got the RBNZ, and we're expecting rates to be cut by 50 basis points. I was reading two articles as well, just to get an idea of what we're expecting from the RBA versus the RBNZ, because whoever's more dovish, we can look to trade. Whoever's more hawkish, we can look to trade the other way, if you see what I mean. I'll show you what I mean. So, Dutton prays for rate cut as RBA enters their meeting, basically. What we're seeing here is the RBA was quite hesitant to cut rates because of inflation, whereas the RBNZ, so their interest rates at 4.35%, whereas the RBNZ's interest rates down at is at 4.25%. So we're expecting the RBNZ to go down to 3.75 and the RBA to go down to just 4.1. So really what we're seeing on the surface is a slightly more hawkish RBA than an RBNZ. What does that mean? That probably means the Australian dollar versus the New Zealand dollar has probably been stronger over time, and we could look for that continuation of that trend, with the fact that we're expecting a bigger cut from the RBNZ than we are from the RBA. That's the forecast. So when you actually look at that pair, we look at the daily time frame, you can see that for quite some time, now if we go all the way back to last year, when the central bank started to cut rates globally, really, you can see that the Australian dollar versus the New Zealand dollar has been bullish. Okay. Now, admittedly, it's not been the best market to trade because it's been a little bit, we've been in this consolidation period for quite some time. But what you can see is in the lead up to this event, I'm noticing we're seeing a little bit of a breakout. It's not the best trend line in the world, if I'm being honest. But you can see this channel's, we are seeing some sort of breakout. So, my thesis for this week is we've broken out above these highs, quite convincingly as well. Break of structure. %'s down there. I think really clear cut on the 4-hour time frame. I'm trying to see. Okay, here we go. Right, this is better. This is much better. So, as a reaction from that order box, we shouldn't really go down below this wick unless we're bearish on this market. The 1-hour flow is changing a little bit as well. This is a bit of a mess. This market's a bit of a mess. Don't really like it, to be honest. I'm not really a fan of what I'm seeing. Okay, so we've got a change of character there. I wouldn't say my confidence on this is high, but it's a way to try and play it this week. 5-to-1 risk reward. It's quite a good risk reward, actually. Basically, what I'm looking at is I'm seeing. I know you would say on the 1-hour time frame that we're seeing the trend maybe turn bearish a little bit. 4-hour and the daily look pretty strong to me, and what I'm noticing is forgot about this. A 50-point cut for the RBNZ is a certainty, a near certainty. So attention will quickly turn to whatever signals Reserve Bank may give out about further cuts. And when I'm reading the stuff here, broadly as expected, I'm seeing a lot more accommodative RBNZ than I am from the RBA. The RBA definitely more hesitant. So I'm just trying to plan this trade and think that can we manage to get into maybe an AED NZD long that looks a little bit like this. I'd say I'd have a confidence of about 3 or 4, just because I don't really like the area it's at. But well, you've got the 1.08 area, I suppose. So that would be my overall idea for the AED versus the NZD. Now, the other way is that if we do get a 50 basis point cut from the RBNZ, but they're potentially not as dovish for future cuts, then we could see some downside in AED NZD, especially if the Australian dollar turns slightly more dovish. But as it stands at the moment, the current trend is that slightly more hawkish RBA than RBNZ. The forecast would suggest that as well. Therefore, we should look for potentially that move, I reckon, up to around the 1.114 area. Okay? That's something I would look for. Hello, Chishaba. Good to see you. Hope you're doing well. Thank you very much for tuning in. Okay. So, that's that. And then if we carry on throughout the rest of the week, obviously we've then got some UK data out on Tuesday morning. Can't get my dates right. And on Wednesday, I believe we have got, yes, there we go. So we've got UK inflation, put some emphasis on the pound. But we've also got the FOMC meeting minutes on Wednesday evening for me anyway, or Wednesday 7 o'clock. Actually, I don't think the time's changed for me. I need to change that to my time that I'm in at the moment. I'm still on the UK time there. So we've got the FOMC meeting minutes on Wednesday. So that should be, for those who watch my streams, have done for years, I don't really like the FOMC meeting minutes. I always find it's just regurgitating from what we already know. But we'll look into it to see if there's anything that's a hint to what's coming up in the in future Fed meetings, should we say? But yeah, that's one to take on. What you'll tend to get around there is really choppy price action. So if you've got a trade on and it's on a higher time frame, ignore it. If you're on one of those scalping trades, be careful, because it can just, it could be like that on FOMC meeting minutes days. Just a mess, really. Okay, Thursday and then Friday, we sort of got some PMIs out on Friday. Overall, apart from the big decisions from the RBA and the RBNZ, I would say that we are probably in a slightly larger state of calm in the markets, right? So there's not loads and loads of US high impact data that we've got coming out. There is obviously talk about Trump and the peace deal there's not even a peace deal, the potential peace deal between Russia and Ukraine. So that puts a lot of emphasis on oil prices, which have been quite volatile over the last few weeks. So oil might still be a decent market to trade. Now, if you notice, my alert was tagged. We got down to 70.15 on oil. 70 is my support area. Got the 50% of demand zone at 70.08 as well. You can see I've actually drawn that twice. I didn't really need to. So yeah, I mean, I think if 70 goes, like if we get a daily close below 70, I would probably ignore this as a demand zone. I'd probably expect that we might see us make a move down to 68.5. What I'm going to do is I'm going to wait until we do hit 70, and I'm going to look at the reaction on like the hourly time frame. We'll look at it from a lower time frame first, and I'll look at it from like an hourly time frame. If we get a solid reaction from 70, I'll look for some longs on oil, because I do not believe that we will see a peace deal anytime soon. I hope we do, and if we do, that will help with the supply issue of oil, and that will probably oil prices will go lower. If there's disappointment around it and it doesn't really turn out to be anything, and the war continues or something, that's going to cause oil prices to spike going forward. So let's just see how we react from that 70 level. Okay. Okay, good stuff. Yeah, I mean, we can touch on the stock market, but it's going out to all new all-time highs. Let's have a look at cryptocurrencies actually, because it's something I've probably not had a look at in too much detail. I'm loving the XRP action at the moment. Look at that for a liquidity grab through all of this and traded. In terms of my favourite cryptocurrency, it probably is XRP. It's probably the one for me that's got the most potential. If I look what's happened here, it wouldn't surprise me if we see a wick down below this liquidity and another move higher. Just look out for any aggressive movements to the downside, any real pullbacks, and then we'll look to see if we can get some upside there. I wouldn't say there's necessarily a trade idea there for me, but on a daily time frame you can see that we are breaking high. Is this a head and shoulders forming? I think we can now safely say that if we do get a break below 1.7, then we're probably turning the bit more bearish on XRP. But until then, we still are finding support. You can see these wicks. You can see how the wicks have been bought into quite aggressively, and so we can see that those buyers stepping in. What do I think about gold? Let's have a look at gold. I don't know why I didn't look at gold. I do apologise, because I've looked at gold in the lead up to today. Okay, gold. Right, so here's our breakout. I'm going to delete. So I'm going to start fresh on gold because that move already happened. Okay, that's interesting. I'm seeing some bearish signs, some early stages, and this is probably the thing is right. This is a market which I am not bearish on. This is a market I'm bullish on, right? However, we have to recognise that we've already come. This current bull cycle has started in December. This year's just blasted higher gold. It's just gone, right? There has to be at some stage some relief, and I think the relief could be coming. I still believe that we could see gold up at 3,000 this year. It's not really at the time when it was down here. It looked like a good prediction. Now it looks like a really hesitant prediction, which tells me that what we maybe could see in gold is something that looks like this. At least a move down to 2,800 before I'm looking to buy. We may just pause here and blast higher again. And if you are looking to be ultra aggressive in your entry, then okay, look, we can see that we're currently trading into a demand zone. It's just the risk reward at the moment to buy gold is not good enough for me. So I'm going to wait out, and I'm going to look for. I'm not going to look to sell it because the buyers could step in at any point, and it could be your profits could be gone in seconds. However, let's look for a pullback. First of all, down to 2,800. It seems quite far away now. We're at 2,900, but you can see some early signs of the fact that we are lower high. You saw those moving averages start to join together, maybe even start to see a bearish crossover. I don't think it's going to be a pretty sell. I think it's going to be a tough one, but we could see this for a bit. We may even come up and run out and take out this high. We could do that. But when we do that, look out for then the dump. And I look for 2,800 as an initial starting point as a support area for right now. Yeah, it's the same with the stock market, right? You just have to be patient and wait for the pullback because it will come. There'll be some bad news. There'll be there'll be some bad news that comes out, or in this case, in gold's case, there might be a lack of bad news, and then we might see gold. The fact that it's people are piling into it as almost like a safe haven thing. It's definitely a bullish market. I'm just warning you to necessarily buy at the elevated levels it is right now, just because the risk reward isn't as good. Um, you'd be targeting uncharted areas. Let's wait for a pullback and look for some areas we can target in the future. Okay, right. Yes, Jeanette, I am on 11 a.m. every single day. So 11 a.m. for me is 6 p.m. for you, I believe. So at this time, I'm on every single day, so you can tune in. Okay, I think that pretty much sums it up for this week. So to summarise, I'm in profit on dollar yen. Good stuff. I like AED/NZD as a market to target this week. I can't say it was the most um, convincing analysis I've ever put together, but it's not bad. I also like the look of oil at that 70 level. 7 a.m. in the UK, that's correct, Curtin. It's good for you as well, right? Um, I do like XRP for more upside. These markets at the moment, gold, XRP, the stock market, like these sorts of markets, these risky markets, risk on markets, should we say? They're at these elevated levels at the moment, and I'm just on a little bit of high alert to think that let's be a bit more patient and wait for a bit more of a pullback, especially in this gold market that you see right now. That's the one where I really want to be patient on, but I'm sure the opportunities will come over the next few weeks or so in these markets, which are at these all-time highs, like the stock market and stuff. There will be a pullback, don't worry. There will be a pause, and then we'll look to carry on. We already took such a great trade off of gold at the beginning of January. I don't even need to trade a gold again for the rest of this year, so I'm not really in any rush to look for that. So my focus is on dollar yen, managing that trade live. I'm still active in it, and looking for some oil longs as well. Or if 70 goes, look for some oil shorts. UK CPI as well, FOMC meeting minutes, some PMI data. So it should be a week where the price action rules the roost, as we say. So yeah, look forward to seeing how this week develops. And if anyone does need me or have any questions, they can ask me. Ask me at any time in the Discord channel. I'll be more than happy to help. Until then, trade well, trade safe. I'll see you all tomorrow for the same time. And yeah, see you soon.